Welcome back to another price action trading lesson. Today we're looking at the S&P 500 E-mini futures chart, and the time frame is the 2000 tick. So we started off this morning by drawing our channels, finding our key entry points, kind of trying to get an understanding of where the market wants to go and where the market's already gone. So as you can see, we started with this downtrend and it broke out of this channel and we expect it to create new low. And that's exactly what it did right over here. Now, after new low is created, we expect it to either correct or reverse. And as you can see, a lot of the time, as it's attempting to make a new low for a bigger trend, it'll automatically create a correction. And then from that correction, we find a different market cycle. And this one just happened to be bullish. So this is something pretty rare where you see this big spike like this. There's a first channel, and then it continues higher after it creates a new high. So you can see we broke out of this channel, it created a new high, and then we had a first entry long, pullback, second entry long, not even touching EMA, and it continued to work higher. So that's when we draw something called a spike in a channel. So here's our initial spike, and then we have a channel afterwards, but it's continuing to be bullish. After you see new high created and it continues to push up, you need to start looking for a secondary channel. So market geometry and price action are the main tools that I use to determine where to find and where to take high probability setups. The highest probability setups are when you take a trade like a second entry long or a second entry short, whatever it may be, depending on the bias of the market, to attempt a new extreme. So after a channel breaks, you look for a second entry long, and then you can use the exponential moving average. It says 21 bar exponential moving average. You can use that as a key entry point. When you see prices reject off of this EMA and there's a good signal bar, a good setup, and all your rules align, you can enter above that bar after it triggers above, like here. Once it triggered above this bar, that's when you would look to enter. Now, a lot of traders will either just put a limit order one tick above that bar after it closes, in the off chance that it does trigger above, it'll automatically trigger them into the trade. Or you can wait for it to trigger and then put a limit order down inside the bar to risk less, because we always put our stop loss one tick below the signal bar. So far right now, looks like we have a second entry short. I'm not a huge fan just because we're so far above EMA. This is a second entry short, but there can always be a wider little short-term uptrend like this. So to consider selling to test new low of this downtrend, I'll need it to break below EMA, and create some sort of lower high below the EMA. I want to see a rejection from the EMA. I want to see that the bulls aren't able to get through the EMA and that there's a high chance that we're going to test new low. Then I can consider entering a trade. But just because we know that this needs to create new low, it can still have a different, it can have a bigger correction. There's a lot of times where like a good setup will form and it'll be a trap. So you have to be not only patient, but I feel like just time and experience in the markets helps as well. Like you'll be able to kind of recognize, like, okay, I've seen this before. It's probably not gonna work. So you always gotta rely on your understanding and your knowledge. A lot of traders make the mistake of doing this for years and years, and they're so strict that they'll only follow their rules, even when their like consciousness is telling them like, hey, you've seen this before. It's actually a good idea to enter here. So like you'll get like a hunch, if that makes sense. And it's important to rely on that too as a trader. As you watch price action form and you've seen this stuff happen enough, you'll kind of have an understanding of what the market wants to do at certain levels. Sometimes it'll just trap you regardless, but that's just a part of trading. You take losses, and the best traders are the best losers. You just gotta not let it affect your emotions and wait for the next one. So let's see if we get a pullback to EMA here and a lower high confirming the second entry short to test new extreme. Okay, so we're spiking pretty strong above EMA here. I'm assuming it's because we have this little short-term uptrend that needs new high. But after this new high is created, this downtrend still needs new low. So I'm hoping after it creates new high like it just did, all the bear bull pressure played out. So we're expecting, I would prefer to see a failed second entry long below EMA. 2 attempts for the bulls to go high. On the first swing down, we want to see it break through this EMA and then a strong rejection below. That way we can capitalize on the bull pressure being played out and the bears still needing to create new low. Let's see what happens. All right, guys, I went ahead and entered this trade. I'm entering on this bar here. It's a first entry long pullback, second entry long failure. We got a trigger below this bar. It's a little bit more risky because we're about to tick through. Hopefully we tick through this order here. It's a little bit more risky because you can see how far away the body is from the EMA. I don't like to take trades like that, but as you can see, we have 2 legs working up to new extreme for the short-term downtrend, uptrend. Looks like we triggered. I'm going to go ahead and move my stop to break even. Hopefully we can get these ones. But I originally thought that we had a smaller downtrend here with break a new extreme already. And then I started to see that we were going to make 2 legs to new extreme here. And once we have such a strong spike below EMA, I got a nice deep limit order on this. I think I was risking like 4 ticks. I'm going for 8, so the risk was tiny. Got pretty lucky on it. Looks like we're triggering through these. I'm going to go ahead and start trailing my stop here. I'm going to try to lock in the profits as it goes. When there's a really strong like bear bar like this one here, like if this closes like strong and then we get a break below, I like to place my stop below or 1 tick above it, just as like a continuation pattern, you know. But I scalped 2 at 8, 2 at 16, and now we're just in with the runner. So anything that this makes is just a bonus. I just like to have this in just in case we can catch like a really big swing. So I'm going to hold this trade and we'll see what happens. All right, guys, our runner just got hit. I was able to take out, let's see, somewhere an extra 35 ticks with the runner. That's a pretty good trade. Like I said, it's really risky entering on something like that just because of how far away the body is from the EMA. But after you see 2 perfect legs to create new extreme and a strong push below EMA, you really want to find any opportunity you can to hop on short. As you can see, we made a nice spike below. So now we even have like a potential secondary downtrend considering how strong this spike is. So we may need to create new low for this. We'll see what happens here. All right, so after we create new extreme, we expect the market to correct or reverse. And as you can see, we got a nice failed second entry short right here. It's basically the exact same thing that I took here, but it formed better for the bulls. I skipped it just because I only take 1 trade a day. I don't want to make profits and then give them back to the market just because, you know, I'm feeling emotional or whatever. Euphoria is a real thing. But as you can see, this is something that we really like to look for as well. After a new low is created, we like to look for reversals above EMA. You can see how strongly it spiked above EMA, and then it created a nice signal bar for you to go long. Just, you know, riding the correction or riding the reversal. If we zoom out, we could even be in like a potential wider trading range, something like this. Something like that, yeah. Maybe something like that. I'll just put it with that line there. But you can see we have a spike up, spike down, and as you can see, the market likes to move in pairs of twos. We have the first leg break, second leg almost to the tick. So if you can start to see these two-legged moves, like we have a two-legged move, a big one here, and then we even have like a smaller two-legged move there. So if you can start to see that, you can kind of start to predict where it's going to reverse. It's not, you can't just enter as soon as you think it's going to reverse just because you see two legs, but you can start to see these market geometry and these signs so that you kind of know what the market's doing. It really likes to move in pairs of two. So now that we have this reversal, I'm going to start playing this trading range, I think, because it doesn't seem like there's going to be any wider trends. Maybe later on in the day, but I'm done taking trades for the day, but I'll continue to do the analysis for you guys so you can study this chart and start to learn for yourselves. We need new high for this little uptrend here. Let's see if we can get a second entry long at the EMA. This bar's forming, but if this bar gets too big, I would consider skipping. All right, guys, just came back from a break. We just kind of consolidated after creating a new low for this spike down. And then we broke out, and it looks like we're pulling back in to a potential wider channel. It's definitely a range day, just not very clear on the levels yet. There's a lot of empty room at the top, so it's definitely more bearish than anything. But we have this little short-term uptrend, pull back into this range that needs to get new high, so we'll see what happens. So after new high, we kind of just started consolidating right here. It's weird. It doesn't seem like it wants to break back into range, but it also doesn't want to break out of it. So I'm going to call it here. It's slowing down a lot. And I already took my one trade for the day. So overall, pretty good. Big trading range day. A lot of empty room up here at the top, which is weird to me. Normally when you see this kind of thing, you expect it to break lower like it almost did here, but we just pulled back into the range and created new high and then just consolidated. So overall, really, really good price action. Every channel that we had, pretty much after it broke, it created the new extreme. So price action worked just as we expected it to. Overall, really, really good day. I hope you guys enjoyed the video and good luck with your trading.